welcome back to ESG Decoded. I'm your host, Kaitlyn Allen, and today I have Mandi McReynolds with me. Mandi is an award-winning author and practitioner with 15 plus years of leadership experience building corporate responsibility and ESG divisions across 4 different industries. Currently serving as the head of Global ESG at Workiva, Mandi helps companies and executives around the globe drive business value and societal impact through transparency, accountability, and innovation. Mandi is the host and executive producer for the video podcast series ESG Talk. Mandi, welcome to the podcast.
Thanks so much, Kaitlyn. It's such a privilege and honor to be here. I'm used to, with ESG Talk, being on the other side, asking all the questions. So it'll be fun today to feel a moment of the hot seat.
Yes,
Thanks for
and
having me.
of course, and it's so fun to meet other people doing podcasts, much less an ESG podcast. I think there's like probably 10 of us.
That's right. That's right.
Yeah. So thanks so much for being here. Let's just say, since it's video now, you're joining us from where? Tell us where you are.
Well, today I am in our headquartered office, which is located in Ames, Iowa, and I'm in our recording studio. So it's got the fancy mics and camera today, but we work in over 180 countries are where our customers are, and so most of the time I'm around the world in our different Workiva offices, and excited to have the opportunity. I often say my office is wherever Workiva business takes me that day. And today it just happens to be in our wonderful headquartered space.
Awesome. Awesome. Well, briefly, before we get to our fun question, could you tell folks that aren't familiar with Workiva just a brief description of the company?
This is a great question that I love to answer. So, as I shared, we serve over 4,400 customers around the globe, working on their technology to help them in their reporting. So think of all elements of corporate reporting: financial, non financial, environment, social governance. And we pull that all together so that they can have accountability, assurance, and be ready for investor grade, regulation, board grade data and reporting that they need to drive decisions and accountability forward in their organizations.
And I love that you said assurance, right? And so we're always telling our clients, like, don't say assurance if you don't really mean it. But this case, it really, you do mean it at Workiva, right? Because you are
Right.
one of the most used kind of original uh, financial accounting type reporting softwares, right? So you guys, I just know most of my clients use Workiva for SEC reporting and
That's
kind of the
correct.
regulatory type stuff.
That's
Yeah.
correct. Serve 75% of the world's largest organizations in their financial reporting. And that's one of the greatest privileges that we had. We were born out of the 2008 crisis as financial reporting got more regulated by the SEC. And in fact, this is a really fun part of our ESG story is over a decade ago, the founders worked on starting corporate social responsibility reporting in the platform. Think about how innovative and ahead of the time that was. So we had some of our early adopter customers actually use the platform for their corporate
Wow.
social responsibility reporting. And then as ESG regulation began to evolve, you look at the Singapore Stock Exchange and 27 metrics, and then we had the EU regulation come out. Countries like Spain that have been doing this for the last 3 or 4 years, India for the last 10, and now seeing a proposal from the SEC, we knew it was time to revamp that platform and really create it to be fit for purpose for environment, social, and governance reporting. So it's been an incredible journey as we serve the world's largest organizations to now tackle the evolution of ESG with them.
Yeah, so cool. Well, speaking of going around the world, just for a fun question, tell us about the last trip you took. Where'd you go and why?
Oh goodness. Well, we're recording today in July, and I think June was a grand capital city tour as people are coming out of the COVID closet and beginning to gather again to have thought leadership events and drive discussions forward around strategy and ESG. So June started off, I was in Washington, D.C. for The Economist, then went to Amsterdam to meet with our team and customers there. Flew over to London for a Moral Money event and roundtable with Simon Mundy, the editor of Moral Money, as we had a closed door session to talk about the future of ESG and how organizations are tackling it. And then landed in Paris for the UN SDGs Sustainable Development Forum, which you can describe that acronym. I know we're on Decoded, so we want to say that it's the United Nations Sustainable Development Goals. And it was CFOs and 150 global leaders, investors, and media coming together around how CFOs are going to drive investment in the UN Sustainable Development Goals and have both business and society impact. So it was a whirlwind of travels in the month of June. What I learned most is that it's definitely an exciting and evolving time to be at ESG. And I absolutely love being back with my family and letting my head hit the pillow of my own bed as I head into July.
That sounds like a whirlwind. So interesting. I mean, I feel like we could probably just do an episode talking about your trip, but I do want to highlight, I think it's really interesting, the UN Global Compact one. So for those that aren't familiar, most people today, we talk about SASB, Sustainability Accounting Standards Board, and GRI, Global Reporting Initiative, et cetera. But UN Global Compact was really one of the very first, pretty high level frameworks for companies to sign on to and say, hey, we agree with these 10 principles and we're going to incorporate them into how we do business. Like when did even GC come about? Do you remember? Is it like
it's been over
20 years?
20 years. And
Yeah.
when you think about the growth, it's over, I think, 14,000 organizations around
Wow.
the globe, small, mid cap, large companies. And Workiva was the first SaaS company to join the CFOs for the UN SDGs because we serve so much of the world's largest organizations and their CFOs as the digital headquarters, if you will, of our platform, helping them. And so as they want to combine financial and societal impact together, we felt it was really important to be at the table and support that conversation. And I'm really proud to see CFOs think about how corporate investment can not only drive business practice, risk, and opportunity forward, it can also have this larger impact as we all try to make a difference in the world and head towards these target ambitions for 2030.
Yeah. I love that because a lot of people, you think, oh, well, I don't care about societal impact if I don't make money, right? Or people are skeptical and think, oh, big corporations don't care about that unless they make money. But it's actually the key to all of this, right? The key to all of this is to making a difference profitable, right? And then the opposite, right? Where in our business can we drive innovation to have a societal impact? So it's all related, but to be sustainable over time, there has to be financial value created, right, in the system that we live in. And so hearing that the CFOs of all these companies are there to talk about that is really, really cool, really interesting. And these aren't like small time CFOs, right? Like this is major companies. Am I right?
They are, and many of them. And Workiva actually plays a really unique voice. Jill Clinton, our CFO, not only represents the technology sector and that work stream, but she also represents how small and mid-sized companies, mid-cap companies can tackle this and be a part of this journey. If you think of Workiva, we're a mid-cap company, we're a mid-cap public company. And so we're not able to invest, let's say, philanthropic dollars, for example, millions, billions of dollars as an organization. However, we do have the opportunity to invest in R&D and invest in research and development and drive our ESG platform forward and our overall platform to help more CFOs around the world do this work and have it be investor grade, board grade, ready reporting and decision making value to them. So I think that's the unique part about the task force is that it's not only global CFOs from large companies, but also now small and mid cap companies can engage in the process too.
Mm-hmm. Yeah, that's really cool. Really cool. And at the end of the day, I mean, I think people can, what do they say, miss the forest for the trees. Am I saying that cliche right? I don't know.
All
Someone
good.
can correct me if that's not right. But yeah, there's so much, of course, the controversy in calling ESG woke capitalism, like all this bizarre, frankly, stuff that's happening. And really in the real world, in the real corporate world, people get it. Like everyone wants to go to work feeling like they're making a difference in the world and, doing something good for whether it's the planet or whatever your particular passion is. People want to feel like they're building a better world for their families and their children. And so all of that is translating into this really high level and frankly very data driven, finance driven conversations about which of these areas, environmental, social, to some extent governance too, are where we as a company can make a material impact, where we do make an impact that we need to mitigate our footprint in whatever way. I mean, these are very very real conversations at the highest levels of business. And it's not a conspiracy. Sorry, everyone. A conspiracy that to think that, our business have an impact on the world and we want to have a positive one, right?
Well,
Sorry, I'm very much oversimplifying, but since it's the topic of the day, I might throw that in.
yeah, I think it's good because what we have to think about in the field and in the profession and companies who are tackling this work is, I've said this in our ESG talk show and with different colleagues, is you can't be so ESG woke that you take a company broke, but you can't be so Wall Street that you forget about Main Street and the rest of your stakeholders. It's really important. Workiva commissioned a third-party research study of 1,300 ESG practitioners. So you actually, to take the survey, had to have ESG as a part of your major responsibilities or large portion of your responsibilities to take the survey. It was in 13 different global markets. And what we found from that is organizations, as they are on this journey, have a crumbling of confidence. So like 2/3 are like really worried about their data, worried about the ability to meet their long-term goals and what they're providing for reporting for their stakeholders. However, those that have made investments are starting to unlock business value, from growth of investors to customer retention and growth of capital, as well as cost savings. And what we found from that is when they make an investment in a person, when they use materiality and stakeholder engagement, not as a checkbox activity, but more frequently on an annual or even some cases 3 months, 6 month cadence. And they are thinking about investing in technology to help them streamline the process, create audibility, look at the future of their work through different elements. We're noticing that they unlock more business value and more opportunities by making that significant investment. And I think that's really the key. Is it's not about regulation. It's not about necessarily, do companies have enough money to do this? It's about a mindset. And it's about, are you really believing and unlocking the business value for your organization? And that takes you assembling. The other key point was a team, an advisory board, internally or externally, that's helping direct your company. And I think the advisory board is really interesting and key. I'm going to go a little bit deeper there if you don't mind. I know it's like, I just want to segue to that, because when you have a collective team of finance, legal, ESG or sustainability, maybe you're in manufacturing, so think about the COO element, all coming together and looking at the strategy and materiality assessment of your company, you are going to unlock more business value. You are going to unlock more capital because you have that diverse perspective, whether it's an internal or external advisory board or both. And so it didn't surprise me in the survey to see those were things that were helping companies unlock more value. And I think that's what we have to chase after in the next few years as an organization and as a community, is really think about the things that are going to help you unlock the most business value. And a lot of it is that infrastructure to help you get there.
I love that you bring that up, because the as a consultant, right, I've been doing this about 9 years, and I haven't worked with 1,300 people the way your survey has, right, or 1,300 companies, but from our experience, every company that we've worked with that has really taken the time to be thoughtful about this and to have those conversations with, we have C-suite members in the materiality assessment. We're really getting those perspectives. We always have an operations person, so it doesn't become like a corporate thing. Like, there's so many things that you can do to make sure that that process is for the business, right? It's about all of these other things, but it's for the business, and how can we unlock the most value from what, broadly speaking, ESG practices have to offer. And I just want to read the list from your report. So the notable areas of positive impact reported, you mentioned a few of them, but this is actual companies, right? Across how many markets did you say? 13 markets?
13 markets, yeah.
Experienced reduction of long-term risk, customer retention and recruitment, cost savings, insurance and credit agency engagement, investor and stakeholder relationships, brand awareness, and employee morale. How could any of those not be good for your business, right? I mean, they just inherently are. And I can 100% attest that's what we've experienced with the clients we've worked with that have really gone all in. Every single one of those categories, you see a positive impact from taking a thoughtful approach to ESG. And it's good business sense. It really is.
Yeah, and I think the other interesting part, I don't know if we published in the first round of the report, but was who was their top stakeholder in the next 3 years. And I loved digging into that around, you can look at the slice from like industry to the size of the company to where they are in the world. And what I found fascinating was the investor was a top audience for them, top three, no matter which way you looked at the data. And then underneath that were the employees and customers. And then across the market, regulation was kind of this bottom piece. And I always say great data is you have to have a tick and a talk, right? There's a story behind the curve. There's often a little bit more meat than just the general data that you get. And when you bring both together, you have a really meaningful story to share. And what I found fascinating was we talk a lot about regulation around the globe. If you look at what kind of takes over the news sometimes, but really the companies, their focus is broader stakeholders to drive value. And I think we can't forget that this is a response to investors. This is a response to consumers. This is a response to employees. And then after that, it's their executives board and regulation. But it truly is, if you're not thinking about your investors, you're not thinking about the growth of your business. If you're not thinking about your consumers, you're not thinking about the growth of the business. If you're not thinking about your employees, you're not thinking about the growth of the business. And I think that was a really good takeaway, is the mindset that these three stakeholders are really important, and regulation will come and it will be a part of the work, but it's not what's driving and waking people up in the next 3 years.
I think that's 100% true. And I mean, I think there's some, I mean, to some extent, people do consider, well, should we do this thing this year if, next year the requirement's going to be different, right? I mean, there has been some short-term impact about related to the new SEC rules or proposed rules, but overall, it doesn't change the direction of the train, right?
Mm-hmm.
So what really changes it is, well, we've made public commitments. We're going to meet them.
Mm-hmm.
We've made them because we want to be a good steward, right? And we want our employees to be excited to come to work here, et cetera, et cetera, et cetera. We want to lower our cost of capital. We want to access all of that good stuff, kind of no matter what the regs say, even though it's obviously a consideration. I don't hear it being the primary consideration either. So interesting. One other thing it was in your report I thought that was interesting was, let's see. While the research, I'm just going to quote this easier. While the research shows that 2/3 of businesses are formally reporting on their ESG data, nearly 60% have only been reporting for 3 years or less.
Yeah.
So cool. I mean, interesting, fascinating, the uptake,
Mm-hmm.
and I think I still remember charts we were using, say in 2019, that had, I can't remember the numbers, but this percentage of kind of the large cap, this percentage of mid cap, this percentage of small cap, and it was like a differentiator at the time. If you were mid or small cap, you can differentiate yourself by doing an ESG report. And now it's like, wow, it's really increased. If only 60% have only been reporting for, I'm sorry, if 60% have only been reporting for 3 years or less, that's just incredible.
Yeah, and I think that needs to be an encouragement to people. And I often say, your CEO made this comment, Marty, and I just really appreciated the conversation we were having and just kind of peeling back the curtain of our boardroom. And we were talking about ESG and we were presenting to our nominating governance committee. And he made the comment, and I've said it several times afterwards, is that it's taken 100 years for financial reporting to get it right. And guess what? 2008 proved we hadn't gotten it perfect. And we're constantly evolving and debating about it. And then seeing the survey, we have to think about, this is a 3-year-old practice, and it is going to go through iterations and evolution and continuously get better over the course of time. And we can't really expect that it's going to it needs to reach the point of the financial level of reporting and disclosure. We can't expect that these companies within 1 year, 2 years, 3 years of reporting have the same level of confidence, so like I kind of looked at the confidence stat from it, and I was like, it's not surprising. And I also think we have to consider too that, one of my EMEA colleagues asked this question. It's like, well, EMEA, Europe's been doing this a little bit more, or places where there's longer regulation. I was like, yes, corporate social responsibility reporting, but not necessarily ESG reporting. And I think that's the distinct difference, is when you talk to a person of practice, they're going to say, well, we've been doing corporate social responsibility for 10 years. However, we've really been doing more like ESG reporting the last 2, maybe 3, so I do think there's a difference, and the field is seeing that difference, even if they're a more mature company.
I think that's so important to point out. And because there are companies that have been doing, CDP is 18 years old, right? We have a client that's been doing CDP reporting for 18 years. There's a lot of kind of longstanding CSR type practices, or that started as CSR reports, but it was before this expectation from financial markets that those potentially financially material issues actually have, investment grade type data. And I think that that's one of these big distinctions that a lot of people miss, right? Yes, we've got experience doing reporting for a broader stakeholder communications type exercise, but not necessarily the one that really involves the CFO and involves, a level of scrutiny, potential scrutiny and potential audit, potential, legal liability, right? So it's very different what we're talking about, and the way we scrutinize every word of a report. Now, we always have, because I, not a lawyer, but worked in legal aid for a couple of years, and I understand like every word means something, especially in this space. But there wasn't necessarily a fear 10 years ago that something you put in a sustainability report could become, potentially audited or anything like that, and I think that's one of those shifts, because people do realize some of these things do impact. You have all the kind of terrible black swan type examples of companies losing billions of dollars in value for whatever reason that falls into the E&S category and the G category. So,
and it's a piece too, where as these teams come together, they speak different languages. So I do think we're going to go through a season. It's a team sport. You need finance, you need legal, you need ESG teams to come together. And, I can say through experience of several industries and companies and the clients we serve, bringing those teams together is so critical, especially when you start to look at the regulation and the liability. What's
Yeah.
challenging is, again, they talk different languages. So, a really good example is greenhouse gas protocol. Well, it says scope 1, scope 2 emissions is where there's financial and operational control. And there's good, healthy debate, even our own team over, well, okay, is a long-term lease building, do we have financial control? Well, we have operational control, but how far do you say financial control? And that's a good, healthy debate for those teams to have and get to what's the right and appropriate and with integrity disclosure that's going to matter. However, it takes some talking to of all the teams. It was an example where it was like, well, this greenhouse gas protocol is like 2004. I was like, well, that's when the protocol was written. A good example of why would a legal or finance team know that? But in their mind, that seems so out of date. Well, it hadn't changed since 2004 in that way. So those are good moments of tension. And I think we're going to see a lot of cross education from both teams or all three teams as they begin to work together.
Yeah, definitely. Well, I'm thinking maybe, I know we've already whipped through half an hour together, but I did want to ask a little bit more about how Workiva, how your product has shifted as you've built out this ESG piece. If you could just describe that a little bit for listeners who are thinking about automation and digitizing and their data is something we believe is really important. Let's chat a little bit about that for a moment.
Yeah, it's one of the things that really attracted me to Workiva as a company. In fact, everything that our team touches our product team and innovation team. And so we actually have about an hour to 2 hour jam with them weekly or biweekly, where like if we encounter a problem, we get to take it to them, or as they're trying to solve customer problems at a macro level, they bring us iterations of the product and we get to poke around and ask questions, or they get to ask questions of us. And that is one of my favorite hours of the week, because you think about how much you're helping the rest of the field get better. We did case studies of our customers or potential customers on how many hours they spend on ESG reporting. And it was upwards of, if it's a smaller company, a little less complex, 200 to 300 hours, to a larger, more complex company, over 1,300 plus hours of reporting. And some of that was just Q1. I did a look at my previous company in Q1, and we spent 563 plus hours. And it's a little exact, but that's how and I looked at that and I was like, this is just Q1. And what would happen if this incredible ESG analyst that we hired, who had awesome experience in the market and product development, we could unleash her talent and potential and get away from the over dependence upon our email and the number of approvals we had to do. So right away, I think our product creates that efficiency for people, the collaboration space that we've been known for, that we've invested so much in. Now we're layering into this a framework manager, an ESG program manager, which really allows companies to start to map to the different frameworks with their data. Maybe they want to tag something for one of their rating agencies like MSCI, Sustainalytics, and some of the others that you and others might know so well if they work with the investor community. And then begin to look at this data as, how do we create consistency and auditability, an audit trail? And you know this, if I change a number in a report here, how do I see the difference of the change in the report as it's in design, not necessarily from an Excel over to design? Let's be honest, lots of errors happen there. We all know that.
Literally just talking to someone about this yesterday, literally having dinner, and she was like, that somebody keeps changing my Excel box, but they don't highlight it.
Yeah, and then, that's why you need the tag and you need the linking. And if you change a number in a report, how does that filter all the way down through all of your different reporting to stakeholders? Or let's say you're updating quarterly the projections for your environmental data. Do you want to play and simulate with that data? and see what kind of scenarios would happen based on location, or if you close a plant, or if you changed an office square footage. And that matters. The other part of the platform that I think is really exciting is the true source data. So with our linking and API technology, we have the ability to go directly to the source system. So when you think of the complex nature of ESG data, we've got Workday, you've got Oracle, maybe, you've got, I'm just talking about the human capital side alone, right? You've got training and development, maybe Integrity or something else that you use, survey data from your employees, and all of that comes from different systems. Think of all the errors that happen when you don't go to the true source of the system. And so you're dependent upon then how many people, if I look at human capital data, sometimes that can be 20 plus people in an organization that you're trying to pull and they're logging into a system. Well, if you can go directly to that system, that data can link over, you're having that tag for the assurance and the audit, and then you have that approval of the person, you've just created a whole, one, elimination of process issue, but two, a more secure, more trusted level of data that you might not have otherwise.
I think that's important. And also, I mean, obviously API, well, for those that don't know, sometimes API in this pod means American Petroleum Institute. So
Good
the
call.
API, yeah, APIs are the little digital connections between systems that allow them to talk to each other. So that's really cool. And I think the other piece that, a lot of people think everybody's on softwares, but a lot of people aren't even on, especially in smaller companies or private equity backed companies, or even at private equity firm levels. Some of our capital markets type clients aren't even on a system at all, right? For some of these things, especially human capital or whatnot. So I think just in general, there's usually a patchwork, some of it being manual, some of it being software. And it's really important to be able to bring that all together and have that kind of single source of truth, I guess, is what they say for in tech, I guess. I don't know. Blockchain.
Yeah. And I think
I'm making a joke.
There's beauty too.
Just
Like
say blockchain and everyone thinks you're smart.
I think there's beauty too when you think about, how you can use templates in the system. And when I think of private equity, there's this beauty to each firm could have their own level of an ESG report, but it could all come together in that beautiful aggregate for you as a holistic company. And in our survey that we just talked about earlier, 60% of the respondents were from private equity. And I think that there's this growth as you see a transition maybe from private to, I shouldn't say private equity, we're private companies. But as you see this growth of private equity, it's really bringing them along. Supply chain. So as I'm a part of a larger supply chain and that large supplier is asking you for this data, to their employee base, to they're looking at it from this level of what if I go public, right? And so I think we're going to see this growth over time of the private markets engaging more in ESG. Regardless, there are some countries where there is regulation. US is more focused on public, but I think that's something that will come probably more in the next 3 to 5 years as the work of private equity begins to take shape and they can support those companies. And then we also see that happening with the supply chain.
And I mean, frankly, we saw that shift start it's probably 2018 or so. And that's why we started a capital markets practice alongside our corporate practice, because, well, not only did we realize the investors are often getting up to speed too.
Right.
And the LPs, everybody's kind of getting up to speed on it, but really started seeing that several years back, and I think it's just continued to grow. And even though some of that is quite nascent still, and there's an episode we did with Preqin, which is one of the big private equity data providers, probably last summer. I should probably check in with her. I think it was about a year ago, and they were just building this thing out, and still she had very admittedly, like, this is very new. We're working on it. So I guess it's just the part of that broader trend of, okay, we're making this, we're building it as we go, we're building it in collaboration. And I think overall for markets, it's really good to have such wonderful cross-market collaboration. You've got
Mhm.
the LP association and you've got the industry associations, you've got engagement happening up and down supply chains and all these issues. And it's just, I think it's good for business. It's greasing the wheels of a lot of things. It's greasing, especially innovation, really greasing the wheels of innovation. I mean, we see this energy industry is a great example, right? So much of the innovation happening in emissions reduction is because what originally started out as a pressure from investors and stakeholders has now led to all of this incredible innovation and capital and value being created with different technologies to be able to detect and repair emissions and emissions leaks and that sort of thing. You have a whole funds sprouting up around this, and it's really exciting and cool, and it's all starts with that cross value chain, cross capital markets discussions and collaboration. It's really kind of exciting. One of the many co-benefits of all of
That's
this
right.
movement. Yeah. 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 Well, Mandi, any final thoughts before we wrap up?
Thank you so much for having me on the show. It's fun
Yeah.
as a listener to be on there. I appreciate your gentleness as I was in the other hot seat, being used to asking other questions on the ESG Talk podcast. So a privilege to be a guest. And I think if it's any encouragement to those out there is that the field is evolving, like we said, with the 3-year journey. It's an investment in the technology and tools, the talent, maybe teachers, consultants like yourself that are going to help companies really advance and start to unlock business value. So my note of encouragement to people is, raise your hand, get started,
Yeah.
get out there. It's not too late for you to get on your journey. And if you are on the journey, keep going because the
Yeah.
demand is only going to get bigger.
Yeah. Thank you so much, Mandi. It's been a privilege to have you, really. I'm so grateful that you came on. Thank you.